90% of traders are walking blindly into a slaughterhouse, and they are financing their own execution with every single click. There is one golden, unbreakable rule used by the greatest speculator in human history, a man who brought Wall Street to its knees. If you break this single rule just once, you are guaranteed to blow your entire account. And yet, almost every single amateur trader ignores it every single day. Look at the financial markets today, a vast and relentless ocean of digital screens glowing in the dead of night. Millions of minds are racing, calculating, sweating, chasing charts, hunting indicators, and burning capital like dry paper in a forest fire. And what is the ultimate result at the end of every single trading week? Massacre. 90% of retail traders walk into this financial coliseum like lambs to the slaughter, willingly handing over their hard-earned money to the ruthless mechanics of Wall Street. They look everywhere for the secret formula. They buy expensive indicators, they pay subscription fees for anonymous signal groups, and they search desperately for the holy grail hidden inside complex algorithms and lagging moving averages. They are searching everywhere in the universe, except where the absolute truth actually lives, inside their own undisciplined, undiscovered psychology. Centuries of market evolution have passed since the days of buttonwood trees and ticker tapes. Thousands of sophisticated books have been written on technical and fundamental analysis, yet the bloodshed remains identical, generation after generation. Why? Because traders consistently ignore the single most powerful, inviolable rule ever forged in the history of financial speculation. It was discovered by a man who made and lost fortunes worth hundreds of millions in today's adjusted money. A man who single-handedly brought the entire stock market to its knees during the panic of 1907 and shorted the devastating 1929 Great Crash until Wall Street leaders begged him to stop for the sake of humanity. His name was Jesse Livermore, the boy plunger, the greatest speculator who ever walked the earth. And the foundational rule he used to build his legendary empire can be summed up in 5 devastatingly simple words. Never average down losers. To understand why this singular rule is the ultimate divider between the market masters and the doomed, you must first understand the diseased psychology of the average retail trader. When a normal human being buys an asset, whether it is an equity stock, a commodity contract, or a high-volatility digital currency, and the price immediately begins to plunge against their position, what does their primal brain scream at them? Panic? No, something much worse. Complete and utter denial. Admitting that you are wrong feels like a direct, violent assault on your intelligence, your ego, and your self-worth. Instead of accepting a small, controlled, and painless loss, the average trader convinces themselves through elaborate mental gymnastics that the market is simply and unfairly punishing a fundamentally great asset. The price drops from $100 to $80. Instead of cutting the cord and accepting reality, the trader thinks to themselves with dangerous optimism, it is an absolute bargain now. If I buy more at 80%, my average cost drops down to 90%. And I will break even much faster when it inevitably bounces back. But the market does not care about your feelings or your mathematical averaging. The price drops further down to $60. The internal logic gets even more desperate, driven by panic and fear disguised as conviction. They buy more. By the time the asset hits $40, they are completely over-leveraged, emotionally paralyzed, and staring directly into a devastating financial abyss. As Jesse Livermore famously noted in his timeless wisdom, a man may fool himself into thinking that he is investing, or he may fool himself into thinking that he is a patient long-term holder, but when the market goes relentlessly against him, he is simply financing a costly mistake. Averaging down losing positions is not a sophisticated strategy. It is financial suicide, masquerading as hope. It is the absolute, cowardly refusal to look harsh reality straight in the eye. You are taking your hard-earned capital and throwing good money after absolute ruin simply because your fragile pride refuses to utter 3 simple words. I was wrong. Jesse Livermore did not survive the most volatile, cutthroat markets in history by being hopeful or overly optimistic. He survived by being ruthlessly objective, intellectually honest, and surgically detached from his ego. He realized very early in his storied trading career that the market is never wrong. Individual human opinions, however, are frequently and catastrophically wrong. When a trade goes against you immediately upon entry, it is the market definitive verdict. Your timing, your analytical thesis, or your overall direction is fundamentally incorrect. Livermore knew with absolute certainty that cash is a trader's ultimate ammunition. If you throw all your ammunition into a dying, bleeding position, you leave yourself entirely defenseless when the real life-changing market opportunity finally presents itself. Notice the profound, undeniable inversion between the amateur and the master. Amateurs average down losing trades because they desperately want to feel right in their own minds. Professionals pyramid into winning trades. They add to their positions only when the market proves them undeniably right, and the trade is already sitting comfortably in profit. Taking a small, controlled loss is a badge of honor for a real operator. It means you respect the mathematical laws of survival far more than you respect your own ego. A blown-up trading account is nothing more than a permanent monument to human stubbornness. If the rule is exceptionally simple, and the historical proof spanning over a century is absolute, why do modern traders continue to commit the exact same fatal error over and over again? Because human biology has not evolved in 10,000 years. We are biologically wired for survival in a supportive tribal community, not for survival in cold, calculated financial markets where survival requires going against every single natural instinct you possess. Modern trading platforms have only accelerated this self-destructive loop, making it instantaneous to deposit more funds, at reckless margin, and rescue a failing trade with a single tap of a finger on a smartphone screen. Technology has made it easier than ever to fund your own total destruction. Today, struggling traders sit in online chat rooms and echo chamber forums, posting screenshots of their heavily read positions, looking for random strangers on the internet to validate their delusion by telling them to hold the line. They turn professional trading into a pathetic cult of collective denial. Most people do not trade to generate consistent wealth. They trade to validate their fragile ego. They would rather lose half their net worth proving to the world that they were right about a long-term trend than take a small civilized loss and admit that the chart beat them today. To cross the great chasm from a struggling amateur to a dominant, consistent market operator, you must undergo a brutal, uncompromising psychological metamorphosis. You must strip away every single ounce of entitlement, false hope, and emotional attachment from your trading terminal. The exact moment a trade goes against your predefined, rigid risk threshold, you exit the position. No hesitation, no desperate prayer, no looking back over your shoulder. Treat that exit like the urgent clinical removal of malignant cancer before it spreads to destroy your entire financial portfolio. Never catch falling knives in a raging downtrend. Let the market bleed out completely. Let the overarching trend exhaust itself. Do not ever try to be a celebrated hero attempting to bottom-tick a crashing asset just to boast about it later. Wait patiently for the market to objectively prove that the institutional buyers have returned in force, and only then commit your hard-earned capital to the table. Honor the prevailing trend as absolute law. The raw tape tells the unvarnished truth long before the lagging fundamentals ever catch up. If the price of an asset is collapsing into the abyss, your personal opinion that it is deeply undervalued is completely, laughably irrelevant. As the old market adage goes, the market can remain irrational significantly longer than you can remain solvent. This is the exact point where the path permanently splits for every single person listening to these words. You can close this program, go right back to your blinking charts, and repeat the exact same self-destructive habits that have been silently draining your trading account for months or years. You can keep averaging down your losers, fighting the tape with emotional stubbornness, and blaming the market makers, bad luck, or manipulation for your continuous failures. Or you can draw a thick, permanent line in the sand today. You can look directly at your trading journal, confront your past mistakes without flinching, and make a sacred, unbreakable vow to yourself. Never again. From this exact second forward, you do not hope. You do not argue with the price action on the screen. You do not throw good money after bad in a desperate bid to save face. You protect your remaining capital like a fierce warrior protecting his final stronghold against an invading army, and you execute your trades with the cold, calculated, mechanical precision of Jesse Livermore himself. The financial market is a massive, relentless engine designed by nature to transfer wealth from the impatient to the patient, from the emotional to the disciplined. Stop feeding this ravenous machine with your ego. Cut your losers fast. Let your winners run without interference. And finally, claim your absolute sovereignty over the charts once and for all. Rise above the noise. Execute with iron discipline. Conquer your inner demons.